Hi, I'm Whack.
Hey, and I'm Pat, and thanks for joining us for the 95th episode of the Weekly Orbit. This is Friday, April 11th. We're just talking offline. This is our final episode of the normal Weekly Orbit, but we have some news maybe we'll share a little later. But it's been a couple weeks since we got together, Whack, and it's been just shitty markets again. I was thinking that ever since we started the Weekly Orbit, we've pretty much been down only.
Yeah,
And
much.
I'm superstitious, so I'm going to say we're going to stop the program so that we're going to be up only from this point forward. Maybe that's it. Maybe that's why I have this podcast to blame for all our financial woes.
Yeah, we
What do you think?
started right around just before Atlas, right? Like right
Yeah.
around the all-time highs, pretty much in dollar terms. And since then, we had a few good months in the beginning, as we were leading into Atlas, and those first few weeks after Atlas, they were really good, and we were so full of hope. And if you watch those early episodes, we were so happy and excited, and things were good. And then since then, it's just been new ways of saying, it's okay, guys, we're going to be okay, for 2 years. And
I
yeah, it's
know.
not been okay.
I know. It's been tough. This
Yeah.
last couple weeks have been probably some of the toughest. We'll look at that now with markets,
Yeah.
and right now Ethereum's at 1552. I'll be honest with you. I have purposely not looked at any charts since all this tariff fiasco started because I just
Yeah.
this is not going to do me any good looking at the at all the red charts. So today was the first day in a while. I opened it up and took a look. I'm like, oh, 1500, yikes. So yeah, it's been rough. Let's take a look at the last. I want to look at the 2-week chart here. We're down 14% on the week, almost 18 the last 2 weeks. It's been tough. RPL is probably even worse. Let's take a look at RPL. Unfortunately, $3.75. It's actually up 1% in the last 24 hours. But over the last 2 weeks, down 25%. So what's your make of, we could probably talk all day about macro stuff, which is this is not a macro podcast, but
Yeah.
certainly macro things have impacted prices all across equities, crypto, even the bond market. Everything's just having a really hard time.
Yeah.
What's your take?
Uncertainty breeds chaos. That's what it is. And with the Trump presidency, the only thing that is certain is that there will be uncertainty. And it doesn't, people are trying to understand what he's trying to do, and there's so many contradictory things that are coming out of the Trump White House right now that no one really knows what's going on, and no one knows why things are happening the way they are happening. And with all that said, it's just people don't want to invest, right? People will sell, they'll move to cash, they'll move to gold, it looks like, not BTC. And it's really, really difficult to try to figure out what's going on and try to position yourself. So people are just selling. And ETH, went down to $1,380, somewhere around there. RPL went down to $3.14. We hit the pi number. It's been bad. It's been really, really, really bad. Bitcoin went down. All alts pretty much all got wrecked. It's just been horrendous out there for alts. So the market has been punishing, and this was the time that we were hoping we'd be getting into the bull market phase, and we'd have friendly crypto regulations, and everything would be good. And what's really funny is that the crypto stuff coming out of this White House has been incredible. For the most part, right? The good stuff has been really good, and then there's been a lot of bad stuff as well, with the grifting and whatnot. But SEC changes and IRS changes in terms of clarifying DeFi stuff, and all of these things are things that we really wanted.
Yeah.
And the things that the ETFs, options ETFs got approved for ETH, and all of these things are things that we really wanted. And the backdrop, sadly, is just so much bigger and so much more impactful than we, I think, realized could happen. I think this is beyond the understanding of most people, like, had expected. Like, people thought that he would do tariff stuff. No one thought, this is what we would get. It's just, yeah, there's huge uncertainty. And it's really funny. I think that, if and when market conditions do rally, crypto is poised for really, really good stuff. It's just, you have to wait for it.
Yeah, I mean, on the regulatory side, it's played out exactly the way people wanted it. We had a friendly SEC. A lot of these lawsuits have been dropped or settled. There've been clarification on certain regs. It's like that part of it is working out well, and that's great, probably for long term. However, this crazy tariff stuff is just bonkers, and I guess. In the first administration, he kind of toyed around with tariffs a little bit, but there's a couple of adults in the room, and there's no adults in the room right now, and he's just doing whatever he's got this like mercantile view of the world that, I mean, I don't. We could talk forever about it. How crazy his number. He's using trade deficits for each country to determine tariffs, and it's just a really bad metric. It's even worse than we talk about TVL. Or transactions for trying to measure an L2 or a protocol, and you're like, well, it's not the perfect metric because there's ways to manipulate it and all that. Like trade deficits, that's just a bad way to measure that stuff because there's so many factors that go into that. And
even
then
countries that had surpluses, like Australia, got hit with a 10% tariff too. So it's like, what are you trying to do here? Like, it doesn't make sense.
No, and then they use ChatGPT. They use ChatGPT to come up with it's just so amateurish and
yeah.
And Scott Bassett, he's out there trying to do, message control. He's being asked questions. I can't remember what was on, but he's like, I don't know. I don't know. Like, I don't know. A lot of I don't know is from the Treasury Secretary. Yep. But yeah, then he's what else he said? He said, oh, well, all those laid off federal workers can work in all the factories that are coming back to the United States. You're like, do you really believe that? Do you really believe Americans are going to be making sneakers, Nike sneakers on an assembly line? I'm like, no, that's not how comparative advantage works in economics. Like we export really high-end goods and services with high profit margins. We import low-end stuff. All the low-end shit from China. Buy for Christmas. It's pennies, profit margins. It's just like you don't want to be making that stuff. That's what poor countries make. Rich countries make high-end products in financial services and entertainment and things with large value add. And this is how the global markets work. And these knuckle draggers have, I don't know what kind of view of the world, and I don't know where they got educated, but it's a fiasco. And like you said, the uncertainty is almost even worse. It's almost better if he's just, okay, 25% tariff, and then businesses can then start planning and trying to strategize on how we're going to move forward. What are we going to do the next 3, 6, 9, 12 months? And they can't do that because it's constantly, it's a whipsaw back and forth. And so hiring managers and there's less investment because people are afraid to, invest. Are we going to invest money this quarter? Are we going to hold off? It's almost worse. The indecision is worse than the actual decision in some ways,
Yep. Yeah. And that's where we are right now. One thing I will say is, going back to the RPL price, like in my wildest dreams, I never thought we would be this low. Like, I honestly, it's kind of unfathomable to me. I'm kind of astonished, in all honesty, that we are this low. If you scroll down a little bit, you can see that under 1 year, we're down 86% basically. And that is a brutal, brutal hit. And that's not even, from the highs. Like the highs were 2 years ago, right? So we're down even more from the all-time highs. Like, we're down 95%, I think, from the all-time highs, which is just an astronomical amount. And sadly, that's where
Yeah,
we 94%. Yeah,
94. Yeah.
94%. Yeah, but we actually went higher than that. That's according to Binance, we were at like $65. So
Mm.
we're down bad. And I honestly, like, I've seen these kind of moves before, right? The crypto going down so much. Even like ETH, in the 2018 market after the blow off top, it went down, from 1440 to $80, which was really, like, I've seen it happen before, like many times, that the coins have retraced that much. So I shouldn't be surprised that RPL has retraced that much, but it's still, like, to experience it is just kind of like gobsmacking. Like, I still can't quite believe that we've come down this much. So
Right.
yeah, I hope
I
that
know.
the
It hurts.
protocol's still there. We're still working. We've still got a community. The team's still developing. So hopefully, when market conditions change, we'll be in a position where we can hopefully, like, make moves. But it's tough, man. Like, it's been a really, really tough few
Yeah.
years.
So that's what I was thinking earlier was this, what's the staking market look like? After all this nonsense with tariffs and Trump, hopefully settles out at some point, which eventually it will. Is this gonna be a consolidated market where you have, like, maybe you have a big Lido, and is there going to be somebody else? Is it going to be Rocket Pool? Is it going to be, because there's a lot of staking protocols now. I would expect some consolidation there, and there might be only a couple left standing when it's all said and done. Do you think that Rocket Pool is going to be one of those?
Yeah, so I think so. Rocket Pool has, like, the reputation. Like, even now, when we get mentioned, staking gets mentioned by Ethereum Foundation researchers and stuff. The two protocols that mostly get mentioned are Lido and Rocket Pool. Like, there is an entrenched, like like it's entrenched in people's minds that Rocket Pool is something serious. So in that sense, we there's some hope for that. But the staking environment right now just has no attention on it. Like, the number of validators we have is around 1,065,000. There's some validators entering, like hardly any leaving. Like, 4,000 entering right now, so that's 2 day wait. Exiting, there's about 16 exiting, so that's, like, a few minutes wait. But it's been kind of flat, like, for the last, I want to say, 6, 8 months, maybe even a year, in all honesty. Like, not quite a year, maybe the last 9 months has been kind of flat around this 1 million validator mark. And it seems like, we've got this limit here. But very soon, the staking ETF is going to get approved by the SEC, so that might drive a lot of stake coming into crypto. So that's going to be something interesting to see how that plays out. But yeah, like, Rocket Pool, has gotten smaller. A few of the protocols have gotten smaller. The ones that have gotten bigger are EtherFi, Binance Staking. Those are some of the ones that have gotten bigger. But Rocket Pool is still in people's minds. So hopefully, when the time comes, we have the ability for people to come and stake with Rocket Pool.
EtherFi is a restaking, right? So it's a little different than, it's not like
Yeah.
pure staking. It's kind of a little different animal, isn't it?
That's right, yeah. So they will have their validators, and then they point their withdrawal address for their validators to EigenLayer, and then gets filtered through EigenLayer. So they get a little bit extra yield from that, and they have native restaking built into the protocol.
Gotcha.
Yeah.
Well, during all this market turmoil, let's take a look at what the discount was on rETH, because during this, those times you're going to have a lot of redemptions coming through, and it looks like currently the rETH discount is at 0.538. Lido, in comparison, is at 0.07. So it bumped up. We used to be, a couple of weeks back, we were down at 0.0 something, and which was good, just about on peg. It's bumped up a little bit since then. So all in all, what do you think about the discount here? It's still, it's not great, but it's not terrible, considering the volatility we've experienced.
Exactly, yeah. Thankfully, we didn't get hit too hard. But what's happening is, like, there's this loop that kind of is happening where we're at peg, right? So then people want to sell their rETH, so they sell their rETH, and then we get a depeg. And then as people see a depeg, then they want to sell more of their rETH because they think it's depegging. So then it causes a bigger depeg. And then there's a couple of things that happen to kind of, like, balance that out. The first thing is that people can go long on something like Contango and, like, long rETH. So that would add buying pressure to rETH. And then the second thing and looping it. And then the second thing that people do is they exit their validators to try to get the exit ARB. So then those two things happening together kind of get us back to peg. And then the cycle starts again, where people then sell at peg because they want to sell at peg, and then it kind of causes that cycle again. And that cycle seems to last around 6 weeks, from peg to peg, basically. And each time that happens, we lose some validators, and we get a smaller market cap because people are selling our ETH. So it's a bad cycle to be in. Thankfully, we've identified a way of potentially hopefully fixing this, and that is, protocol level redemptions. So instead of selling your rETH in the secondary market, you would go to the protocol and say, hey, I want to, burn my rETH and get my ETH back. There's no ETH in the deposit pool right now, so what do I do? And then the protocol on the back end would, kick out some validators, probably the ones who are underperforming or whatever threshold we set. We'll have to make it really, really clear beforehand of how we're going to exit validators in that situation. And then those validators would get exited, and people's rETH would be, they'll get ETH back at peg. So once we get protocol level redemptions, then there'll just be a lot more confidence in the protocol that we're not going to depeg, or any depeg will be very short lived, just as long as it takes to get through the exit queue, and get your money out, which maximum I think is 9 days or something like that. That I think would put us in a much better situation if we can, once we get that activated. That looks like it should be in Saturn 2, hopefully, but we haven't fully come up with a design yet or voted on that yet. So it's something that we really need, though. We definitely need that. It'll just give a lot more confidence in the protocol as a whole.
Yeah, and speaking of the deposit pool, we had a nice deposit here by Balancer. It looks like they deposited about 142 ETH back on the 4th of April, which is it's kind of cool to note that Balancer did that. We'll talk about that in a sec. And just as we went to recording here, I pulled up the week of deposits. Kind of had a really nice day on the 6th. We had almost 1,100 ETH put in, but we're back to about triple digits each day, or somewhat. So what's it? Kind of a good sign, I guess. Balancer dip their toes in, on their own to buy 142 worth.
Balancer has a really good relationship with the IMC. A lot of the rETH liquidity that the IMC works with is around the Balancer ecosystem. So they know us, they know how we work, and this is their treasury that they're putting into rETH, which is really, really cool. Protocols have ETH, they have it just sitting around, and we really want them to put that into rETH instead, so it becomes a productive asset. And obviously it helps us, it helps them. But yet, as far as I know, they just did this of their own volition, which is really cool. If someone had gone to them and told them to do this, then they could have happened through the STAR protocol, STAR program, and then everyone would have made a little bit of money from it. They did it themselves, so it's all good.
That's all good.
Yeah.
Okay, on to our next thing. RPIP 69.
Actually, just before we move on, going back to the deposits, I think we'll see this kind of cycle play out as well. Is as we're close to peg or unpeg, then we'll see more ETH coming in through the deposit pool, and when it's off peg, then you'll just see it happening on the secondary market with the buys and sells. So you won't see it actually coming into the deposit pool as much. So you can kind of chart out the peaks and troughs, I think, with the deposit pool as well, and seeing how things are working there.
Yeah, that makes sense. Because you wouldn't want to, if you had a discount on the secondary market, why would you buy directly from the protocol? Because you can get, in this case, 0.5% more our ETH, by buying it on Balancer than going right to Rocket Pool.
Yeah.
But on those days where it's at peg, you may want to do it right at the protocol level. So
yeah.
Okay, RPIP 69. Text has been finished. It's called Increasing GMC Share of Inflation. I got a couple questions about this. First, I'm a little confused with, we got RPIP 69, but then on our online voting, we've got proposal 1, proposal 2, proposal 3. So is there a difference between RPIP 69? Would that be voted as proposal 4 on online voting? Mm-hmm. Is that how it works? Because we used to just say, okay, we're just doing a snapshot voting of RPIP 69, but now it's got to be labeled proposal 1, 2, 3, 4, 5, 6, 7. Is that the new
Yeah, so this one
order?
will change. Yeah, this one will change. Parameters on the Guardian wallet and how much money is divided out across the different branches of the PDAO. So this one will be an on-chain vote, whereas there's other votes that are coming up that'll just be snapshot because they don't have an on-chain component to them. So that's the reason why. So there's actually another vote for the GMC that's about to start, which is automating the payments from the Guardian wallet to the GMC. We're actually just about to finish the one for the IMC, or maybe we just finished it. So automating the payments for the IMC as well, that'll just happen automatically now every month instead of there being a person doing it. So that's the next vote that's coming up. That's proposal 3. And then this one is going to be a separate vote. So it'll probably be 4 or 5. Yeah, so it's not on Snapshot, right? It's on your smart node, so you'll see on there. And I
Gotcha.
think that there's a web portal for it as well, like on the
Yeah.
stake.rocketpool. No, I think it's node.rocketpool.net, but I'm not sure. I've not used that front end yet. But that whole like side of the site is being divided out. There'll be a stake.rocketpool.net and then a node.rocketpool.net. So if you connect your node address here, then you can vote on things here as well. So you don't have to do it through your smart node. This is for people who wanted to have votes delegated to them, but didn't want to dox their actual smart node. Then they just made a new wallet and they set it up as a node, and then they could just do that basically. So yeah, there's just makes it a bit easier. So yeah.
So in the terms of RPIP 69, increasing GM share of inflation, we're tinkering around with this because I assume it's because the price of RPL has gone down, so they need to increase the amount of tokens in the treasury to pay for different grants and things. Does that
Yeah.
sum it up?
Yeah, so the GMC's not broke, but we are we're in a tough situation. The value of RPL has just come down so much that our amount that we have in our treasury is very, very small. And we're in a risky situation where, we won't be able to pay for grants going forwards. It's a tough spot. So what we're doing is there's a few different things that are happening. One is we're trying to ask for a little bit more of the inflation to come to the GMC, which is nice. We're also thinking of there's some ideas being floated of how we can generate more revenue to come to the PDAO, and then part of that would come to the GMC. There's also some ideas being floated around that haven't been voted on or even like formally proposed yet about what's going to happen with the RPL inflation in the period between Saturn 1 and Saturn 2. Because the period between Saturn 1 and Saturn 2 is actually really interesting because we will start giving node operators ETH rewards, for staking the RPL, but we're actually going to keep going with the RPL rewards at the same time. So it'll be like a bonanza period basically for those node operators in that period, as long as they're on mega pools. And then what's going to happen is with Saturn 2, then the RPL inflation will be reduced from 5% to 1.5%. In that between period, there's this idea kind of being floated around that maybe we would start reducing the inflation that goes to node operators by 0.5% a month, and taper it down, and instead just give that money to the PDAO and try to bolster our treasuries because it's really bad right now. Even the PDAO treasury is down to, I think, $250,000. And that's not much money at all. And the GMCs is down to that similar kind of amount, like $250,000. And we've actually, had months where we paid out more than $250,000 in just 1 month. So
Right.
it's really tough now. It's a really difficult spot.
Okay, speaking of maybe generating some revenue, Rocketpool Bridge campaign. So why don't you sum this up for us? There's a few different options. Now, this regarding the Ronin Bridge they're talking about and sending rETH or sending rETH over Ronin and maybe collecting a fee on that transaction. Could you just sum up what this is about with regards to the Ronin Bridge?
Yeah, so Alpha Growth was a project that the GMC hired to do business dev for Rocket Pool, and one of the ideas they had was that the GMC the protocol now, the PDAO, needs new ways of earning money, and we need new sources of income coming into the protocol, because just relying on inflation when the token price is going down isn't enough, and we need more streams of income. So one of the ideas they had was, in trying to grow rETH, which is what their mandate was, trying to get rETH to other chains, and in order to get it to other chains, you need to set up bridges, and Ronin chain, which kind of started as an Ethereum side chain, it is an EVM chain, but it's more of its own thing now. There are still bridges between Ethereum and Ronin chain. So they want to set up this new bridge through Chainlink called CCIP, using CCIP technology, and they want to mint rETH on Ronin. So they want to set this bridge up to move use rETH on Ronin. So they want to set up a bridge of taking rETH from mainnet onto Ronin. And using this bridge, Alpha Growth had the idea of setting up a toll for that bridge. Basically, people just pay a little bit of money when they're using that bridge. So this discussion was basically around, should we bridge to Ronin? Most people said, yeah, that's not even the question. And then the other thing is how much should we charge? Should we charge anything? And then the other question was who's going to own the contract rights of that bridging, the bridge. So those are the latter two of the main questions that have kind of been discussed back and forth. And it looks like we're heading towards charging a small fee of $3 maybe. That's kind of what it looks like. Mm-hmm. And it also looks like, no one is going to control the contract. We're just going to burn the keys for most of the things that we can do with the contract, because the team said that they can't keep the keys for that for different reasons, like Langus here says. And then there's not many people in the community who have kind of stepped up to say that, we will look after these keys. And it might be that, we need to set up some kind of committee or some kind of security council. It could be the kind of thing that the security council would do, but we haven't set up a security council yet. So these are things that, would need to get done in order for people to have the keys. Now, as a stream of revenue, this is not going to be much.
Right.
It's going to be $2 or $3, $3 per bridge. And let's just say, 10,000 people bridge to Ronin, which would be an astronomical amount. You're not going to get that many people bridging. That would be $30,000. The amount of income that we will get from this is going to be quite small, but it's not about the income. It's about getting rETH onto these other chains. And the more times we do this, then the chance of it, becoming something real increases. It might be that we're getting some hundreds of thousands of dollars a year from these bridges, which is not insignificant. So that's where the discussion is. It looks like this last bit is going to be rushed a little bit through governance, because Ronin and Chainlink want it set up sooner, and we can't basically go through the full governance cycle. So there's some small shortcuts being made with it being filled in later, but it looks like it's all going to go through okay.
Yeah, Langer says here, in terms of the team, they had concerns. One was trust. That one of the things we've been trying to do is eliminate the team from, having ownership of anything and making it rock pool decentralized. And then he goes on to say risk and legal concerns as well. So I guess the consensus is we'll charge a small fee, collect a little bit of revenue, but the contract itself will burn the keys. No one's going to really be held, they're not going to be held responsible for maintaining it. Does that sound right?
Yeah, that's pretty much what it's looking like. The big risk is this burn and mint function. So what happens is you could vastly print a whole lot of rETH using this bridge on the Ronin side, and it could really mess up the price of rETH and cause a lot of issues. And that's not something that has happened before with bridge hacks and stuff like that, where the token on one side gets stolen, what's backing up on the other side, all this kind of stuff, it becomes a real issue. So we definitely don't want to be in a situation where something like that happens. So having minimal control over the keys makes more sense.
Right. Cool. Okay, on to the next thing. So Langers here had a message for everyone that the brand new testnet has been deployed to Hootie. The testnet has Houston code, so it's similar to mainnet, except a few parameter changes to make easier and responsive. The testnet is still new, so there are a few things to iron out, so bear with us. The other thing is, it talks about, I don't know if we got it here, but maybe it's in my next one. Here it is. With regards to the Pectra update, with the hard fork that's coming to Ethereum very soon. EIP 7251 increases the max effective balance. And what they realized was we had originally thought that in order to migrate over megapools after Saturn 1, you'd have to exit your validators and then re-enter. And what this IP 7251 allows for is possibly transferring from a validator to a megapool without exiting. And so the question is, does the community want to proceed as we were planned, where we would have to exit the validators and then, start up the megapools, or should we delay Saturn 1 so that we can incorporate this EIP fully into the next protocol upgrade? There's been discussion on this. There's some pros and cons. The pros of it is there's less friction. It's easier if we can, migrate from a validator to a megapool without exiting. The downside is it's going to delay Saturn 1. So you have any thoughts?
I think the team Langers figured out that there was this change in the spec of MaxEB, the EIP, compared to what they saw a few months ago when it was still being designed out, and what they thought it was going to look like, and then what it actually is looking like in its final version. There's a change in the way that you can put exit addresses together, and basically it means that you could potentially consolidate validators in a way that the team didn't think that you could do before. There's been a bit of pushback from the community in a way. I think Langer's just got a little bit excited because he realized that we might not have to churn the validators, but in discussion with the community over a week or so, it looks like it's going to make sense to just do the churn and just eat that churn. And there are a few benefits to that as well. With the churn happening, it would actually give keep rETH at peg because people are exiting their validators, so it would keep rETH at peg. And that's nice to see that. And then the other thing is as well, as there's a queue developing, it'll give potentially a nice boost in the APR to rETH as well. And people can then, decide on how they want to enter or exit, new validators and how long they want to spend in the queues. So that's going to be really, really interesting to see how that plays out. But yeah, I think it's just going to stick with the original Saturn timeline. The adding 2 months or whatever to the plan is not worth it.
Right. They could incorporate it into Saturn 2, right?
I don't think they're going to incorporate it in Saturn 2 either. As far as I know, this might come in an upgrade that comes after Saturn 2.
Oh, okay.
Yeah, as far as I know.
When did when I read this, I thought Ingers wrote it. The EIP has changed since the last time we looked at it, and I thought, was that change just recent? Because I thought this has been kind of settled for a while, the 7251, but I didn't know when's the last time they looked at it, because it seems like last minute.
In the fall of 2024. It looked like it was set, but I think there was some late tweaks that happened after that point. So this is something actually that we were arguing for, that if we could have a bit more flexibility in how validators could be joined together, that would help Rocket Pool. But then we went to the Megapool design instead, which is kind of like a shortcut to doing something similar, but not quite as effective for Ethereum. But it looks like we will potentially take this up in an update after Saturn 2.
Okay, sounds good. Yeah. All right, well, let's move on to our wins for the week, Whack. I guess if you want to start, I'll finish it up.
Yeah, so my win, it's not really for the week, but for the last 2 years, is Weekly Orbit. It's been so much fun spending time with you and our audience, and talking about Rocket Pool in a slightly different way from the way that I normally do on Rocket Fuel. We talk about prices here and markets and all these things that I don't do as much on Rocket Fuel. And spending time getting to know you more and talking to you, our little chats before and after each episode that we record, I really appreciate those. And sometimes they last quite a while, but I always enjoy them. And always look forward to them, and I'm gonna miss it. So yeah, that's my win, is the great time that I've had recording the Weekly Orbit and getting to know you and sharing a different side of Rocket Pool with the community.
Yeah, mine wins very similar. It's 95 episodes started. I approached you at ETH Denver about this idea,
Yeah.
and I thought, how can I help out and contribute because I'm not technical, and you're gracious enough to accept, and we started this little adventure together, and we had a good run at it, and so I'm really thankful that you had trust in me to partner up like that with
Yeah.
someone you didn't really know at the time, and we've gotten to know you, and I really respect you, and you're one of the best guys I know. So I've got to know
Thanks,
you
man.
over the last couple of years. So it's been a wonderful ride, and I also thank all the viewers out there who've watched us week to week, who've listened through our banter and side discussions about acting and whatever else has been going on in our personal lives. So I want to thank everyone out there for watching. So what we talked about this briefly before the show, is we may come back from time to time if there's something good to share, if there's exciting price action on the upside, because we've covered enough on the downside, but if there's some good price action on the upside, something spectacular happens, maybe Saturn goes live and there's a lot of excitement, maybe
A huge partnership or something, or
yeah,
whatever.
yeah.
Like, yeah.
Yeah, kind of do an emergency pod. So we may, come back to, from time to time just to,
Yeah.
just to discuss that, because it's fun. That's the best part of this, is just talking about crypto, something we normally do with our friends privately, but, hey, just jump on turn the camera on and then broadcast it. So because people, take enjoyment from that, especially when it's good news too.
There's be good news. We won't make episodes of bad news. Let's not do that.
No, we're done. We've had enough of
good
those.
We've had enough 2 years of bad news, pretty much.
I know.
So,
Yeah.
well, let's make good news episodes.
Absolutely.
Yeah.
So that wraps it up. Thanks for watching and listening. We will touch base with you in the future. Until then, we will hopefully catch you on a future date. So take care,
Yeah.
Rec.
Thank you. Bye for now, guys.
Bye-bye.